US monopolies and gold stocks globally are shining. Welcome to the Daily. My name is Jessica Remy. I'm a market strategist here with Mumu. It's great to have your company and thanks for joining us. What a day it is. We're seeing US stocks march higher. The S&P 500 is now up $2 trillion in value this year after it's risen 3.2% in value. While the Aussie share market, guess what? It's actually risen more than the US market. The Aussie share market, as tracked by the ASX 200, is up 4% this year after it's risen by 100 billion Aussie dollars. Now, this is despite what happened overnight. The US Federal Reserve again threw cold water on any potential US interest rate cuts. Seems like Groundhog Day. But the fact is that we do have US stocks closing near record all-time highs. Most sectors are rising. Now, this suggests that investors believe 2025 is going to be another record strong year for stocks. So far this year, we've seen 9 of the key 11 sectors in the US gain between 7 and 4%. And when you dive into the detail of those stocks that are charging the most, they're in a couple of core sectors that you need to pay attention to: AI software, uranium, chips, transportation, cybersecurity, social media, and gold. But stocks in those sectors that are rising the most are monopolies. Now, this is really interesting to note that we're not only seeing stronger earnings, but the notion is that strong earnings can continue for these key sectors because demand is having a tip of the iceberg moment, regardless of what happens with interest rates. Now, to expand this out, let's show you a couple charts. We can see Palantir. Palantir is a darling. Their stock is up 50% so far this year. Constellation Energy is up by a similar tune. It's up by 40% this year. Supermicro is up 28%, Uber's up 27%, CrowdStrike up by 26%, General Electric 24%, Meta up by 23%, Newmont up by 23% as well. Basically, what we're saying is the rally is broad, but the stocks that we've highlighted are leaders in their field. Again, just driving the point home: Palantir, Constellation, CrowdStrike, Uber, Meta, Newmont. They are the biggest stocks in each of those sectors, and they're basically operating monopolies. So that's why you need to take stocks like these seriously. Constellation Energy, Palantir should be on your radar if they're not already. As always, there are market jitters, though, just like we saw on Friday. Perhaps we could see that tonight with US CPI. Should markets get upset, many will be using dips if we see a pullback as an opportunity. That's something for you to consider. As for stocks to watch down under, the Commonwealth Bank of Australia, Australia's biggest stock, our biggest bank, is in focus. They've just reported far better than expected profits than the market was expecting. What was the profit? Well, for the half year, they reported $5.13 billion in cash profits. That beat the expectation of $5.09 billion. It's worth noting most of their growth actually came from business banking. Their business banking division profits rose by 6%. And what's also pleasing is that CBA's outlook is pretty strong. And I guess that's underscored by the fact that their consumers are us and businesses, and they see that the economy is pretty strong. They're also noting that Australian employment is strong, public infrastructure is strong, and that basically means CBA's outlook could be bright. And we've given you plenty of commentary to look at. Head over to Mumu's platform and just search for my name for where we think the stock might potentially go and why you should be looking at pullbacks as opportunities in CBA. Let's move on to gold and perhaps why you need to be taking gold seriously. It's kind of a big deal that most of the 10 best performers this year are gold stocks. So this is a chart of Mumu's platform. We're showing you gold stocks are dominating the leaderboard. These are some of the best performers this year. Evolution Mining, Regis Resources, Gold Road Resources, Capricorn Metals, take your pick. They're up 30% this year. Now, you need to take gold seriously because bets are on for not only gold expected to punch through 3,000 US an ounce imminently, but China just bought 200,000 ounces of gold, and that's after their central bank resumed buying of gold after a 6-month halt. Before that, China was on an 18-month gold buying spree. So what am I saying? Well, now the thinking is that China could kick off buying another round of month-on-month spending sprees. Why? Well, their 10 largest insurance funds have just been allowed to buy and invest in gold for the first time ever. This is a big deal, and this is perhaps why you should be keeping some of those gold stocks that we've mentioned on your radar, as well as this ETF. This is the GOLD ASX ETF. It gives you access to physical gold growth. So perhaps look at this, or the stock that we mentioned a little earlier and yesterday, and that is Newmont. Of course, Newmont is the world's biggest gold company. It's listed in New York and also on the ASX as well. But do keep these stocks on your radar. As we said, gold is probably bound for much higher levels, perhaps maybe even $4,000. Thanks for your company.